you made a little quick revision on what we discussed yesterday. There's nothing much technical. We just had a very basic input discussion with reference to what is the definition of accounting. I gave you the five facets of accounting. And I think just to take a quick recap in terms of what we discussed, we understood that accounting is supposed to be an art. And that is for the reason that it is supposed to be principle based and therefore involves judgment. Then I gave you that there is a particular sequence in which accounting is done, and that sequence is supposed to be you first record a transaction in a journal, and then it is followed by classifying it in a ledger, and then it is summarizing in the form of a trial balance. And then we said we capture transactions in accounting only when they have got a financial character. That means they are supposed to be, you can say, converted in monetary terms. And finally, we said accounting does not end at the stage of just making a trial balance, but it continues and also involves the concept of interpretation with the help of tools, as we said, ratio analysis. There was one set of a discussion, and then we started discussing some accounting terminology, which we are still discussing. I am supposed to give you a three-step model, and out of which I've already given you a very first and the second step. And just to take a quick recap in terms of the first step, I told you that you need to put a question on the balance sheet date. That means you're going to put a question on 31st December, which is because generally internationally we follow the financial year January to December. So you're going to put a question on 31st December. Is the benefit already obtained, or is the benefit yet to be obtained? Or maybe it's a blend. We didn't talk much on the blend so far. So if you say the benefit is already obtained, then it is supposed to be an expense in the income statement. And when you say that it is yet to be obtained, definitely creates an asset in the balance sheet. And then we said, in terms of step number two, you need to consider the benefit is going to be obtained within what span of time. So are you going to get the benefit in the next 12 months? It becomes current. Or is the benefit going to extend beyond 12 months? Then it becomes non-current in nature. No worry, I'm yet to document the steps to you. But before we document that, now we need to get into a little more inputs on a third step. So let's, I think, take the journey forward. So I'm just going to quickly put down the time scale to you to get the inputs on the first and the second step. Oh, I need a line. So let's consider this to be a time scale. And let's say the financial year is 1st of January and it is ending on 31st December. No worry, don't worry on the notes, we'll write down later. So get the focus very clear that in terms of the step number one, you need to put the question on 31st December. So because that is very important, you don't need to put the question on the date when you incurred the expenditure. You need to put the question on 31st December. And that is regarding, is the benefit already obtained, or is the benefit yet to be obtained? We'll talk of the mixed situation also very shortly. So when you say the benefit is already obtained, it is definitely an expense in the income statement. I'm going to put that in the income statement. And if you say it is yet to be obtained, certainly creates an asset, and we're going to go to the step number two. There is no need to go to the step number two if you say it's an expense. We're going to go to the step number two only when you say that it is supposed to be, in this case, it is an asset. I think somebody is sharing the board by mistake. Okay. And then we go on to the step number two. And in terms of the step number two, again, you're going to put the question again on 31st of December. That is this benefit going to extend up to 12 months, or is it going to extend beyond 12 months? So when you say that the benefit is going to be, let's say, up to 12 months or greater than 12 months, if it is 12 months, it becomes a current asset. And if it extends beyond 12 months, it becomes a non-current asset. So that discussion we have done yesterday, I want to now introduce the third step to you. Now, have a watch very carefully. Irrespective whether you said it's a current or a non-current asset, I will definitely go to step 3. Mind it. Whether you say it's a current asset, whether you say it's a non-current asset, we definitely go to the step number 3. And in terms of step number 3, we are now going to decide the category. Is it a financial asset or is it a non-financial asset? We're going to decide, is that a financial asset or is this a non-financial asset? Now, hear the words very carefully. If I say, do I get a contractual right to receive? The word is, do I get a contractual right to receive? If you say you get a contractual right to receive, it's a financial asset. When you prove the fact that you're getting a contractual right to receive, it becomes a financial asset. Which means if the other person does not pay my money, I can sue him in the court of law. Then that's called a financial asset. But if you say that I'm not getting a contractual right, but it is creating an opportunity to receive, it is not giving you any kind of contractual right, but it is giving you an opportunity to receive, it's a non-financial asset. Don't worry, I'll take example. So the input, what you need to keep in step number 3 is the asset which is current or non-current? Is it giving you a contractual right to receive? It's a financial asset. Or if you say that it is going to give you an opportunity to receive, it creates a non-financial asset. Now let's take a few examples before we document these steps to you. And we're going to make a run through with a few examples on these 3 steps. So let's get your inputs. Let's say I purchased a machine, a company purchased a machine on 31st December. So let's put the first question. Is the benefit already obtained or is it yet to be obtained? Your inputs. So is the benefit already obtained or yet to be obtained? And that's right, it is yet to be obtained. Is the benefit going to extend within 12 months or will go beyond 12 months? Your benefit is going to come within 12 months or beyond 12 months. Wonderful. It's going to extend beyond 12 months. Now, let me put the question. Do you get a contractual right from the machine? Or is it going to give you an opportunity to receive? You're going to use this machine to produce goods. As much goods you produce, as much revenue do you earn. So is it going to give you a right to receive contractual or opportunity to receive? And that's right. So it becomes a non-financial asset. Simple. So the moment you decide an asset, you got to decide the second input, current, non-current, the third input, financial, non-financial. Great. Let's go to the next one. Let's say, for example, let's say, for example, I paid an salary to the employee. He joined my company on 1st of December. The employee joined the company on the 1st of December. He worked for the month of December. Then I paid him for the month of December. Mind the dates carefully. He joined on the 1st of December. He worked for the month of December and I paid him the money for the month of December. Is the benefit already obtained or yet to be obtained? So is it already obtained or yet to be obtained? That's right. He's already rendered the services in the month of December. So I have received the benefits and therefore it becomes an expenditure, expense in the income statement. Yes, you can call it as a revenue expenditure as well. Great. Now I'm just going to add a little more inputs before I go to the next example. Now watch this carefully. In terms of the financial asset, I am making a slight little change. And this could be slightly complicated. So please hear me very carefully because I'm just going to add some element. I am getting a question, Sakshi. So we record machinery on the balance sheet. So isn't it a financial asset? You see, a machinery, you cannot sue the machinery in the court of law, can you? If your machinery is not giving you benefits, you can sue maybe the supplier of the machinery. But The machine has got no right, no obligations to serve you. Now, that's a different case. I think that's a good question. So let me also tell you, in accounting, you need to consider every transaction separately. Now you buy a machine, that is one transaction. The machine is not working properly, so you sue the person from whom you bought the machine. That's a second transaction. So we cannot merge the two. We cannot say that on account of the machinery, I'm going to sue them. So every event, every transaction is going to be recorded separately. So buying a machine is one. So when you bought the machine, the perception is that your benefit is yet to be obtained, will extend beyond a period of 12 months, but it's going to give you opportunity to receive. Now, the machine doesn't work properly. You sue the person in the court of law, the seller of the machine. That's a second transaction that would be accounted separately. I hope you got the first point, right? Okay. So now let me give you another input before I take the example. When I say that there is a financial asset, I said you get a contractual right. But let me now tell you, the contractual right should be to receive cash. The contractual right should be to receive cash, not to receive goods and service. I said not to receive goods and services. In order to call it as a financial asset, you need to get the contractual right to receive cash. If I am going to get a contractual right, but this is to receive goods and services in return, it's not going to be a financial asset. I'll not get into the logic at this stage because this is what you're going to study. When you come to certain specific standards, the guidance, the US gaps in terms of how do you decide it's financial, non-financial. So for the time being, I'm just giving you a basic test that if you say it's a financial asset, number one, you should get a contractual right to receive. And number two, the right to receive should be in terms of cash, not in terms of goods and service. Now, let's take the example further. On 31st December, I paid an insurance premium to the insurance company for the next year. On the 31st of December, I paid an insurance premium to the insurance company for the next year. Is the benefit already obtained or is the benefit yet to be obtained? And that's wonderful indeed. It is yet to be obtained. Great. Next. Is the benefit going to extend up to 12 months or will it extend beyond 12 months? You paid the premium for the next year. That means for the next 12 months. So is this a current or a non-current asset? Wonderful indeed. It becomes a current asset. Do I get the contractual right to receive the cash back or am I going to get only an insurance cover and they will compensate me maybe by way of repair or replacement of the asset? So they will only give me an insurance cover. They may not give me a claim. So let's say there is a medical cover. So they're going to basically cover that. They're not going to give you cash directly, of course. Of course, you might say the cash is given to the hospital, but they will only repair, replace the damage to you. So it's going to be non-financial. Trust me, any kind of advances which are paid and you are going to get any kind of goods and services in return of those advances, that is going to be non-financial in nature. Let's take another example. Now, let's say, for example, on the 1st of December, let's make it a little complicated. Let's say on the 1st of December, an employee joined my company. On 31st December, he said, sir, can you give me some extra money? So I gave him the money for December and January. I gave him the salary for December and January. Is the benefit already obtained, yet to be obtained, or is it both? And that's rightly said, it is partially obtained. So can I say that December month salary is going to be an expense and the January is going to be an asset? Great. Next. Is the salary paid for January, the benefit is going to come for the next 12 months or will it extend beyond a period of 12 months? The benefit is going to be for a period of next 12 months or extend. And that's right, just for a period of 1 month. So it creates a current asset. Now, what are you going to get in return for this advance? Are you going to get goods and services? Are you going to get cash? You paid an advance to the employee. He's going to work for you in the month of January. So in return, are you going to get cash or goods and services in return? And that's right, services, which means it's non-financial in nature. Super. I'm sure now you got the basic inputs in terms of things. We've understood the three-step model. You want me to take more examples, or can I document and then take a test? Okay, I'm getting some interesting questions. The first question says from Seth, any service comes in non-financial? Yes. And Sakshi, are we saying all items appearing on the balance sheet are not financial assets like machinery? Yes. And I get a question. So one more. Okay. And I'm getting, is investment a financial asset? Yes. Some more examples on contractual right. Okay, let's take more examples with you. So I'll take 2, 3 more examples. Then I think we'll document this three-step model, and then we are going to take a small little test and you'll get the score. So let's begin. First of all, get the focus very clear that you need to decide, is the benefit already obtained, then it's expense in the income statement. Yet to be obtained, it's an asset. Partially obtained and partially already obtained, asset plus expense. To the extent it's an asset, you go to step 2. Then you need to visualize with a common sense the benefit will be coming for 12 months or will extend beyond 12 months. And if it is 12, it is current. If it extends beyond 12, it is non-current. And then irrespective, you go to the step number 3 to decide, do you get a right to receive money in cash? I should be able to sue the other party in the court of law because I've got a contractual right to receive cash, not goods, not service. And in this particular case, we can say if there is only opportunity, it's a non-financial asset. So let's take some more permutation combinations with you. On 31st December, I paid an advance to a supplier. Supplier is a person from whom I buy goods. On 31st December, I paid some advance to the supplier. Is the benefit already obtained or yet to be obtained? And that's wonderful. The benefit is yet to be obtained. Now, is this benefit going to be within 12 months or extend beyond 12 months? So you paid in advance, he's going to give you the goods, of course, in the next couple of months, a couple of days only. The benefit is within 12 months. Great. I think step 1 and 2 would not create a problem. Now tell me carefully, is this going to give you a contractual right? Yes. But is this contractual right to receive cash, or is this a contractual right to receive goods? You are getting a contractual right, of course, but there are 2 elements. The contractual right should be to receive a cash. So you're going to get goods. And therefore, it is a non-financial asset. Got my point? It becomes a non-financial asset. Let's take another example. Trust me, this is going to be very helpful when you're going to come to certain technical standards, which is called financial instruments. You're going to certainly remember me at that point of time. Okay, let's take more example. I made an investment. I made an investment on 31st December. I made an investment on 31st December. This was a fixed deposit in a bank. I made a fixed deposit in the bank, which is a 6 months FD. I made a fixed deposit FD in the bank, which is for the period of 6 months. Is the benefit already obtained or yet to be obtained? Okay, I think I'll come to your question, Aparba. That's a nice question, I'll tell you. So is the benefit yet to be obtained? Of course, yet to be obtained. The next question is, are you going to get the benefit in the next 12 months or will it extend beyond 12 months? And that's right, it is going to be within 12 months. It's a 6 months FD. So it is going to be within 12 months a current asset. Can I sue the bank if they don't pay me my money? Do I get a contractual right to receive the cash back from the bank in terms of FD? Yes. So what is it? It is supposed to be financial asset. Now, before your mind starts turning wild, you will say, sir, are all investments financial assets? The $1,000,000 answer is yes. If you tell me that you've invested in terms of equity shares, you've invested in terms of any kind of investments, it is certainly going to give you a contractual right to receive the cash. Every investment, whether it is invested in equity shares or it is supposed to be invested in any kind of investment, undoubtedly is a financial asset. Depending upon the period, it could be current or non-current in nature. Now, there was, yes, Gaurav, even if it is a CCD, yes. Okay, I guess I've got a very interesting question from someone. I just missed that question. Let me just come back. There was a particular question. Apurva said, what is the purpose of differentiating the non-financial and the financial assets in nature? Now, let me answer your question. Now, let me ask this question to everybody. You'll get the logic. Tell me one thing. If you've got a financial asset, it'll give you only what is stated in your balance sheet? Or can it generate more than that? If you get a contractual right to receive money, is what you're going to get, is it equal to what is stated in the balance sheet, or can you get more? So I write down that there is a particular FD in the bank. So are you going to get only what is stated in the balance sheet, or can you get more? So probably more, yes, probably more, but generally equal to what is stated, correct? And if that asset is stated at a market value, can I say you cannot get more than that? Am I right? Because you will see soon when you come to the standards in terms of US GAAP that all these kind of assets are stated at a fair value, which you can understand for the time being as a market value, though it's not. So if you state such assets in the books of accounts at a market value, you will probably not get more than what is stated, correct? But let me ask you, if you've stated non-financial assets in the balance sheet, do you think they will definitely generate much more than what is stated in the balance sheet? Do you think a machinery in the balance sheet will only give you benefits to the extent of the value in the balance sheet, or definitely much, much more than that? Correct. So tell me, which are the assets which are supposed to be potentially, giving you more benefits? Financial or non-financial? If I tell somebody that I've got financial or non-financial, which asset indicates a more potential to earn? That's right. I guess you would have got your answer that, when you are going to say, I'm got a little filmy andas to give you the answer if you permit me. There was a famous dialogue in the movie of Amitabh Bachchan where he says, Mere paas maa hai. So I guess if I tell you that I've got something which has got potential to earn, that is the non-financial assets. I hope you got the answer, Apurva. Right? So let's take more example, one more example, a last example before we document this and take your test on that. But you need to be very clear in terms of your thought processes. And trust me, this three-step model which I've given you is nowhere given in the books. I've got patented rights to that, where you can any way easily decide, almost the entire balance sheet asset side, whether it is current, non-current, financial, non-financial in nature. Okay, I'm getting another question. Purpose is only to know which asset has got a potential to earn. Yes, as a reader of financial statements, as a stakeholder of the company, I definitely need information on your assets telling me this asset will give me benefits in the next 12 months. This asset is permanent. It's going to give me the information for more than 12 months. And this is something which will perhaps generate only what is stated. And this is something which will generate something much beyond what is stated. A reader, a stakeholder of the financial statements would be able to get a very good analysis the moment he is able to get information in terms of current, non-current, financial, non-financial. You are able to evaluate the position of the company, the financial position of the company. And therefore, we call a balance sheet as SOFP. That's called a statement of financial position. Got your answer, Sakshi? Okay, so we are getting another question as well. Apurva, you said, I want to understand this difference. Why are we are going to show in the balance sheet representation? Yes, of course. When you go to look at a balance sheet of a company, whether it is in US GAAPs or whether it is prepared under IFRS, you're going to see that the balance sheet will clearly depict the category of financial and non-financial assets, both for current as well as non-current in nature. Okay, I'm getting another question, sir, but balance sheet indicates asset by name, but not bifurcating financial, non-financial. I think you must be a graduate or maybe just done 12th. Am I right, Sakshi? So you're just a graduate, I guess. Right, absolutely. So you're going to see a massive changes coming in terms of how things are reported internationally. Because when you look at that balance sheet which you've done in school and college, it never gives you information on financial, non-financial. And therefore, I did not give you the third step yesterday. I thought first class is not going to be dangerous. So now when you're going to look at the balance sheet in terms of US GAAP, you're going to see something interesting. I'll tell you something very interesting as well at this stage, just to enhance your knowledge. I'll just tell you something which will only enhance your knowledge. You know, if you look at IFRS, International Financial Reporting Standards, they segregate the assets non-current, current. If you look at the US GAAPs, they segregate the assets in the balance sheet current and then non-current. IFRS reflects the non-current assets followed by the current assets. And in US GAAP, they say, no, first we'll go current assets and then the non-current assets. We've got a habit in IFRS indicating what is more permanent in nature. And in terms of US GAAP, they want to show what is more liquid in nature. Because a company could easily realize its current assets faster as compared to the non-current assets. So the reporting which is done in IFRS is based on a permanence. And the reporting which is done in terms of the US GAAP is more in terms of, you can say, liquidity. Similarly, in terms of IFRS, you're going to see when we report, we say it is liability, non-current and current. And in US GAAP, you'll see they'll call liabilities first current and then non-current. So there is a difference in terms of thought process of how you report your assets and liability in the two GAAPs, right? I hope I am pretty clear on that. Okay, Simon tells me, so interest or dividend earned from investment also have got a potential to earn. Well, when you earn an interest, is the benefit already obtained, right? If the benefit is already obtained, it cannot become an asset. You need to put the question very carefully that if the benefit is already obtained, you earned an interest, you earned a dividend, it is supposed to be income. I have not discussed income so far. My focus right now is on expenditure. That when you spend, so let's not talk of income at the moment. We're going to come to four terms: asset, liability, income, and expense. Okay. So one more example on a financial asset. Okay, let's give you a simple example. There's no dearth of example. Let's say, for example, I gave a loan. My company gave a loan to someone on 31st December. And I give this loan for a period of 5 years. Now you decide, is it a financial or non-financial? Undoubtedly, it's an asset. Undoubtedly, it is non-current asset. You decide, do you get the contractual right to receive the loan money? Is it financial or non-financial in nature? And that's right, it is financial asset in nature. Because when you give a loan, you see, you need to think only basic thing. If you've entered into an agreement, if you've entered into a contract, you'll definitely see that it becomes a contractual right to receive. The investments made, the loans given to the parties, and also I would say that if you make a credit sale to the customer, your debtor, the debtor is supposed to be all financial assets. So you're going to see more of inputs coming in when you'll understand the concept of financial asset in detail in the financial instrument standards, right? So I think another example, non-financial. Now I think it's time to take some test. You want me to take all the examples to pass the test. I think let's now take it further. I'm now going to document the 5-step model, the 3-step model, then give you a simple test. And let's see how do you perform. You need to apply basic common sense to decide You need to see the presence of agreement will give you a contractual right. You need to see the right is to receive cash. Then only it becomes financial in nature. Make a walkthrough on a logical front and you'll get the answer. Trust me. Okay. Loan amount goes to the balance sheet and interest in the P&L. Yes, I think some people are going a little faster than me. I'm considering the inputs that, many of you don't know accounting. So I will not jump my line. We're concentrating on expense. We'll come to liability later, income expense later. Okay, so let's give you KB's three-step model. So I'm giving you a KB's three-step model. I hope you remember who is KB. So this is patented KB's three-step model on the element as far as asset is concerned. Okay, so let's give you the three-step model, the step number one. Now watch this carefully, answer the questions with me very carefully. When will you put this question in step number one? On the date when you incur the expenditure on 31st December. When will you put this question? And that's right, on the last day. So this question is to be put on 31st of December, which internationally we say is the year end. Is the benefit? Is the benefit? So we're going to put a question that is the benefit. Now there are three permutations and combinations. Is the benefit already obtained? That is one. Is the benefit already obtained? That is one. Or it is yet to be obtained? That is two. Or we can say it is a mix. It is a mixed situation where some benefits already obtained and some benefits yet to be obtained. Okay, let's put the question to you. If you say the benefit is already obtained, what should be the course of action? I have already obtained the benefits. So what should be the course of action? Very good. It's going to be an expense. And if it is an expense, you're going to put it where? You're going to put it in the income statement. It'll be put in the income statement because the benefit is already obtained. Great. If you say it is yet to be obtained, what should be the course of action? You say that the benefit is yet to be obtained so far. So you're going to create an asset. And what are you going to do? You're going to take this asset in the balance sheet of the company. So I'm going to go to the step number two to decide further inputs. And I'm sure you can tell me that if it is a mix, can I say it would create an expense partially and it'll also create an asset partially? To the extent it is an expense, it'll go to the income statement. And to the extent it becomes an asset, it will enter the balance sheet. And I will also go to the step number two to further segregate it. I hope the step number one is 100% clear. Not even 99%. I guess it is 100% clear. Great. So if you noted this down, let's take you to the step number two. Wonderful indeed. Okay, so let's take this further. Let's go to the step number two. So in the step number two now, when are you going to put this question in terms of step number two? When you're looking at the time frame within which the benefit will come, when would the time frame start? Again, 31st December. So you're going to look at this also on 31st December. You're going to see the benefit is going to come from 31st December onwards. So we'll put the question, is the benefit? Is the benefit? So we've got two permutations and combinations in this case. Is the benefit extend up to? Is the benefit going to extend up to 12 months? Or we can say the benefit will extend beyond 12 months. So the benefit is going to extend beyond 12 months. So two permutations, combinations will come in. And I'm getting a question, Smitha, can you explain the lease as an example? Oh, I don't want to take complicated examples at the start. We're doing basics. Let's not get into complication. I know somebody of you got good knowledge, already accounting background. I also want to take care of people who are learning things for the first time. If I take lease, they will say, so what is a lease? No, 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 no. And I'll tell you something, let's give you in a lighter mood. Couple of years back, I went to Chennai, and I met a very senior teacher in Chennai, and he changed my life. And trust me, the words were golden words. He changed my life at that point of time. He asked me, "Sir, who is a good teacher?" I said, "A good teacher is one who explains well and he's able to illustrate with examples. People look him as a mentor. He's supposed to be good." And surprisingly, the answer comes, "No, sir, that's not a good teacher." I said, "Sir, then who is a good teacher?" And he said, "A good teacher is one who knows what not to teach." Just analyze this. He said, "A good teacher is one who knows what not to teach," because we could be filled up of oceans of things, but we need to consider the psyche of the other fellow as well. You got my point? So let's not get into that. Okay, so let's, I think, take the journey forward. So if I say the benefit will extend up to 12 months, then what do we say? What is the course of action in terms of classifying the asset? And that's right, it is supposed to be a current asset. It is supposed to be a current asset. And if it is extending beyond 12 months, I think undoubtedly it is a non-current asset in nature. So this is how you will present the asset in the balance sheet, calling it as current or non-current in nature. And irrespective you call it as current or non-current, I will still enter the step number 3 as well. So let's have a look in terms of the step number 3. So once you've decided that it is current or non-current, now it is time to decide, is it financial or non-financial? So we're going to see, what are we getting? So we need to see, what are we getting? So when I'm looking at what are we getting, there are two permutations and combination. One is you are getting a contractual right. But please remember, the contractual right has to be to receive cash. When you focus in terms of the contractual right, you need to see the contractual right is to receive cash. So I'm putting it in brackets that you need to receive cash. So the contractual right should be to receive cash. And as a clarification, let me put down, not goods and service. You should not be getting goods or services in return. You should be getting a cash in return. So what is important is the two elements, the contractual right, number one, and to receive the cash. Remember the two elements. You get a right to receive contractual and of course cash. Or the other one in this particular case is you get an opportunity to receive. We can get an opportunity to receive, you can say, to generate benefits later. Opportunity to receive the benefits later. Okay, and I guess I got a question further. Sir, are we deciding after we decided the asset is current or non-current? Is it financial? And then it is contractual, go to investment head and non-financial. Yes, please watch the steps. Your question is already contained in the steps, Apur. So when you say it is a contractual right to receive, what do you call this as? Financial asset. Then it is financial asset. And when you say that it is an opportunity to receive, then it is going to be called as non-financial. So watch these steps very carefully. And you can see that after you complete the step number 2, you have to go to the step number 3, irrespective it is a current or non-current in nature. I hope my 3 steps is 100% clear. I know there will always be a point of further discussions, but I hope I am, quite clear on my 3-step model. Brilliant. Are you ready for the test now? Can I give you a test, just 5 items, and you give me a score out of 5? Don't give me the answers on the chat. Don't give me the answers on your voice. I will just give you the question. You decide the answer. Then I'll give you the answers. Do your self checking, and we get the results. Okay, Sakshi, so if it is an opportunity to receive cash later, contract does not exist, then still it is a non-financial. But in any case, the right to receive cash would be at a later date. Okay, I'll tell you one thing. I'll tell you one thing to make your thinkings easy. You're thinking too complex at the moment. We're learning the basics of accounting. And when you are looking at, a deeper guidance in terms of things, there comes the role of US gaps. So I can answer all these questions only at a stage when we come to the complicated transactions. Trust me. So at this stage, I think let's not get into too much complications. We're still on the basics. As you come to complex kind of transactions, you start studying the US gaps and the IFRS, which addresses those complex transactions. If you're going to apply the complex transaction to the basic fundas, your basics will get a little disturbed. My request, please don't do that. Let's understand only basics. Let's not complicate transactions in the basic part. The complicated transactions will come later when you study the guidance in the form of gaps, right? So don't worry, things will get addressed. You can't learn everything in the basics, can you? Okay, so let's begin with the test. So I'm now going to give you 5, or you want to give me 10? Your choice, 5 or 10 items to decide. I think 5 is good. If you want more, 10, 5 is okay. Let's give you a test, 5 items only. So don't give me the answers. You need to decide your answers independently, put them on your register, and then I will give you the answers. Then you can verify them. So let me give you the items, and you are going to decide whether it's an expense or whether it's an asset. Now, when you say it is an asset, please also decide it is current or non-current, and also further decide it's financial, non-financial. Clearly apply the 3-step model at the back of the mind. Now, unless mentioned otherwise in my test, I'm assuming the expenditures are done on 31st December. Let's say we purchased a building. Let's say we purchased a building. Don't give me the answers right now in the chat box. Don't give me any answers. So let's say I purchased a building, number 1. Let's say we gave an advance salary. We gave an advance salary for 3 months to an employee. So let's say I gave a 3 months advance salary to an employee. So all this is on 31st December, unless mentioned otherwise. Let's say, for example, let's consider that we have a debtor. We have a debtor to whom a credit sale was made, to whom we made a credit sale, and we gave him a period of 3 months to pay. So we gave him a 3 months credit to pay. Next, we made an investment. And this investment is for a period of, let's say, 5 years. And number 5, let's consider that we have given a loan. We have given a loan to the employee. We've given a loan to the employee, which is for the period of 9 months. Right. So this is the items you decide. Sakshi, mainly question is opportunity to receive could be to get cash or also. Okay. Now let's I think make it Sakshi clear. You've not heard my words. When I say opportunity to receive, ultimately you're going to get cash. But there is a difference between saying Sada Hak Et Rak. I think let me make it a little more clear to you. There is a song in Bollywood which says Sada Hak Et Rak, which means please give me my right. If you can demand the money and the other person doesn't pay you, you can sue him in the court of law. It's a contractual right. But when you say there is a machine, it will generate money, but you don't have a right to receive money. You got an opportunity to receive cash. So when you say it's a non-financial asset, please get one thing very clear, that you're looking at the opportunity to receive. Ultimately, of course, you're going to get cash. But what is the focus point? Sada hak et rak. Did you get my point? Did you get my point? You need to understand that picture. So that if I can tell the person, you give me my right, otherwise I'll sue you in the court of law. Opportunity will also be coming in terms of getting cash. Right will also be in terms of getting cash. But what is important is Sada hak et rak. Did you get my point? Okay. Yes, I'm moving aside. Financial asset Sada hak et rak. Absolutely correct. So sometimes you need to take those kind of examples. So if you're done, let me know. Take your minute or two, get the answers. I'll share the answers to you. Very carefully apply the 3 steps and take a call. Is it an asset? Then current, non-current, and is it financial, non-financial? Decide this. If you're ready, let me know once you're done. So let me know once you're ready with the answers. I'll start giving you the answers out here. Okay, I guess majority seems to be done, ready with the things. Okay, let's make a input. I am pretty sure most of you will get a score of 5 or maybe 4. But if you're getting a score less than 4, dangerous. So you must get at least a 4 or 5. Let's begin. I purchased a building. The benefit is yet to be obtained. The benefit will certainly extend beyond 12 months. And I will not get any right to receive, but only opportunity to generate money. So this is going to be a non-current asset and it is non-financial in nature. Next, I gave an advance salary for a period of 3 months to the employee. So the benefit is undoubtedly yet to be obtained. And since it is advanced for a period of 3 months, the benefit will get exhausted in the next 3 months. You will definitely get a contractual right, but not to receive cash. You're going to get the right to receive goods and services in return for the advance. Therefore, it becomes non-financial. So I would say it is a current asset and it is non-financial in nature. You can see that now you are clear with example, non-financial, non-current, non-financial, current, combination, permutation. Then it says there is a debtor to whom you made a credit sale for 3 months. So you made the sale and you're yet to receive the money. So the benefit is yet to be obtained and the benefit will be obtained within the next 3 months itself. So it is a current asset. And you can sue this customer, the debtor, in the court of law if he doesn't pay your money. So you get a contractual right to receive. So I would say it is a current asset and it is a financial asset in nature. Next, it says, I made an investment for a period of 5 years. Now, if I made an investment for a period of 5 years, first of all, when you made the investment, the benefit is yet to be obtained. You are going to get the benefit in the next 5 years. So it will definitely extend beyond a period of 12 months. So it's non-current in nature. And since you made an investment, there will be an agreement, there will be a contract. And at the end of 5 years, if that company doesn't pay your money, you can sue them in the court of law and they'll pay your money in cash. So it becomes financial in nature. So this is non-current asset and financial in nature. If you notice, I've tried to give you examples on each. This is current financial and this is non-current financial. You can see all the combinations done. You can see non-financial, current, non-current, financial, current, non-current. I've indirectly tried to give you more explanations. Then he says we gave loan to the employees for a period of 9 months. So I would say now you've given a loan, the benefit is yet to be obtained, and the benefit is going to be within the next 12 months because it's a 9 months loan, it's a current asset. And if you give a loan to the employee, there will certainly be an agreement. And in this particular case, if he doesn't pay your money, you'll sue him in the court of law. So you get a contractual right to receive. So it is supposed to be a current asset and it is financial in nature. Let's get your scores now on a score of 5. Eagerly looking at that, we start with a 5. I like it. So majority is 5, except a few are at a 4 as well. But I think the majority seems to be 5, 5, 5. A few of you are 4. I said, majority will get a 5. Some of you will get 4. If you're getting a score below 4, it's dangerous. Okay, so I think I don't see a score of 3. I guess maybe there was one or something, but I think majority has got that. Brilliant indeed. So I think you've pretty well understood the concept of an asset very carefully. No bookish knowledge, conceptual understanding based on the Kiwi's 3-step model. Right, let's go to the next one now. This was the first term which I gave you. Now I'm going to introduce you to the second terminology, and that's called equity and liability. I'm going to make your life simple now. Okay, so your compassion for students 5 by 5, thank you. So why is advance to employee financial and salary non-financial? When you give a loan to the employee, you will get the right to receive cash, financial. When you give an advance to the employee, you're going to get services in return. In both the cases, there is a contractual right, but in one case, you get the right to receive cash. Therefore, it's financial. On the other case, you get a right to receive services, non-financial. Correct? So building purchase but did not meet the contractual requirements, this can be sued to get the cash back. I just said, a few minutes earlier, I said that if you buy a machine and it didn't work, you're going to sue the person. It's a second transaction. Don't mix it with the first one. Every transaction, every event is going to be accounted separately. Right? Okay. Now let's go to the second term with you, and this is what we call equity and liability. So let's look at the next term, that is equity and liability. Sometimes I feel, don't take me otherwise, but I feel, sometimes you make the people life simple, they don't like it. You tell the people, let me make your life simple. Let's give you something very simple to decide. No, no, no. I am going to make things complicated. Okay, let's begin. Now let's make your life simple. Let's give you some interesting diagrams to watch. So let's consider and make your life simple indeed. Watch this carefully. If you're able to get this, trust me, you will get my terms very clear. You need to consider that the owner and the business are always two different people. Mr. Ambani, Mr. Mukesh Ambani, and Reliance Industry are two different people. You cannot see Reliance Industry because it's not a natural human being. But when accounting will take place, the accounting will be from the Reliance Industry point of view. So let's consider this is a company ABC Limited. Let's consider this is a company ABC Limited. Now watch this carefully. A company gets funds to run a business, and there are two kinds of funds. One is a fund which is provided by the owner. So in my example, who is the owner? Mr. Mukesh Ambani is the owner. And the company would also get funds from an outsider. So to run a company, you get funds from two different set of people. So Reliance Industry is going to get money from the owners, and Reliance Industry will get the money from the outsider. And Reliance Industry owes this money back to the owner as well as to the outsider. Mind the words carefully. So Reliance Industry is going to get money from the owners and they need to refund this money back. Reliance Industry is going to get money from the outsiders. They need to refund the money back. So they owe the money back to both the set of people. But to distinguish, if ABC has to pay the money back to the owner, it is called as equity. If ABC owes the money to the outsiders, it is supposed to be called as a liability. So when you take the money from the owner, when you take the money from the owner and you need to pay the money back, you of course need to pay the money back. But of course, the money which is taken from the owner will be returned only when the company will liquidate. It will shut down the business. So the business is liable to pay the money to the owner only when the company is going to liquidate. So in order to make a distinction between what you owe to the outsider and what you owe to the owner, we use two different terms. So when the business says, I owe this money to the owner, we're going to call it as equity. When the business says the money is owed to the outsider, we're going to call it as liability. Am I clear? Am I clear? The money which is owed to outsider is liability and the money which is owed to the owner is called equity. Great. Now let's make life simple. When you look at the concept of a liability, trust me, the way you segregated the assets, you're going to segregate the liabilities as well in terms of non-current and terms of current. The way you segregated the assets between financial and non-financial, we're also going to do that in terms of liability, non-financial and financial. So the current as well as non-current is going to be segregated in terms of non-financial and financial. But, where you get a contractual obligation to pay, where you get a contractual obligation to pay financial liability. So I would not say whether there is an opportunity to pay before you get that confusion. So when I am contractually obliged, it is financial. When I'm obliged but not contractually, maybe otherwise legally, then it is supposed to be non-financial. Let's take an example quickly. Every company is liable to pay income tax to the government. Do you think it is financial or non-financial? Please think carefully. So when you say that a company is liable to pay income tax to the government, so what do you say, financial or non-financial in nature? I'm getting blended answers on that. So let me make it very clear. I have no contract with the government of India. In order to pay them income tax, I am under a legal obligation, but I'm not under a contractual obligation. A contractual obligation comes when you enter into an agreement or contract. It is by virtue of the law of the land, it's by virtue of the law of the land that it's my legal obligation. So it would be a non-financial liability and not a financial liability. Let's say I've taken a loan from the bank. Are you going to call it as financial or non-financial in nature? I do a loan from the bank. So there will be an agreement, there will be a contract, and it is undoubtedly financial. So you can say if the liability is payable within 1 year, current, beyond a period of 1 year, non-current. Contractual obligation to pay, financial. Non-contractual obligation to pay is supposed to be non-financial in nature. And as far as equity is concerned, no such segregations are done. Equity is just equity. We never say that equity is current or non-current. We never say that equity is financial, non-financial in nature. So you need to keep in mind the money which you take from the owners, they are called the shareholders of the company. So technically, this is what we call them as shareholders. So the people who buy the ordinary shares, the equity shares of the company are called the shareholders. They are equity. So anybody who's got the ordinary shares or the equity shares of a company is supposed to be equity. And anybody who is an outsider other than the shareholders of the company, so any money taken other than ordinary shares is going to be liability. You take a bank loan, it's a liability. You take a loan from the financial institution, it's a liability. So this is the money which you owe to the outsiders called a liability, and this is the money which is to be given to the owners, the shareholders, is called equity. Simple and straight. Right, friends, am I pretty clear at this particular stage? It's time to take a little leave now from you today early, as I just mentioned yesterday. So this takes care of the two terms. We've got another term, that is income revenue, which we will discuss in the next session. So do revise this all. I will see you again on next Saturday at the normal time. In time, please make revisions on that. Thank you very much indeed. It was again a pleasure to meet all of you. So we will be in touch for sure. So see you in the next weekend. Thank you. Bye bye. Enjoy weekend and take care. Thank you indeed. Thank you all of you. Bye bye.